Okay, Jim, Warren Buffett talked a lot about valuation in his letter to shareholders. Do you think that Berkshire Hathaway is undervalued?
I was troubled by the way that he tried to make us interested. There are a lot of the letters about how it's substantially undervalued and it's incredibly undervalued. And my problem is, here you've got the master, and he is a fabulous investor of companies that he takes private. He is, without a doubt, the foremost, I would say, guy in terms of operations, but we don't think of him as an operator, but he is, because he lets these great CEOs do a job within his company. But where I have trouble is trying to figure out the value added that he's giving us now versus what he used to. And I turn to a table that has many stocks that he bought, and the ones that he's bought most recently are not that good. It is true that he bought Lubrizol at a good price, and he bought Burlington Northern at a good price. But I don't like the idea that I'm supposed to buy a stock off of book value. I don't know how to realize book value, and his love of buybacks does not seem to include his own stock. So no, I'm not. Doesn't make me want to buy.
So do you think the buyback program should be a lot more aggressive?
Well, it's kind of counterintuitive to say on the one hand that your stock's incredibly undervalued, on the other hand not be in there buying hand over fist, and instead praise IBM, which is not really clearly not clearly undervalued at all, but they've been buying back stock. And there's also this disingenuous part about how he really wants IBM to not go up so they can buy more stock. You know, all of us in this business, with the exception of Warren Buffett, seem to care about the performance of individual stocks. The fact is, maybe he's being somewhat facetious. He didn't seem like it. He doesn't care whether the stocks he owns go up. If you use the IBM example, he cares about it later. He talks about investing and about how that you're passing up something now in order to make more later. But investors need to make money. And if he wanted to be able to show that he's making money, he should be paying a big dividend. That's what works. He didn't give us one.
So do you think the letter, it talks a lot about valuation, but do you think it was good? Do you think the letter did a good job of explaining to investors what the company actually does?
Yes, what I think really has helped, and I know I talked about this on Mad Money, I've written in Real Money about it, is that it's a pastiche, it's a mosaic of companies, and he finally gave us the groupings. Housing is one, insurance is another, the regulated businesses, which are rails. Interesting, the regulated is rails. There is regulation, but it's not like the old days, and pipeline. And then there's all these other companies, which I facetiously, they're for me, call cats and dogs because they're really great businesses. But he broke it down. But the upshot of it breaking it down is it's even more difficult to try to figure out what the heck it's worth.
Yeah. And one last question, any thoughts on the successor?
I don't like the parlor game. I mean, you know, hey, we've got one, you'll hear who it is, kind of a folksy thing. Yeah. Hey, if you have one, tell us.
Yeah.
All right, he's not that young, so tell us, and we'll feel better.
Great. Thank you, Jim.
Thank you.